Hey everyone, I hope you had a wonderful Thanksgiving and you're ready for the holiday season. One of the leading conversation topics in December is retail sales. Holiday retail sales can make or break retailers. It's a critical time of year and it's always a big question whether consumers will spend. The holiday sales results, of course, flow into retail property performance, but it has downstream impacts on industrial properties, self-storage, and even the housing market. This year's forecast from the National Retail Federation calls for gains of between 2.5% and 3.5%, while ICSC has forecast retail sales growth of between 3% and 3.5%. To put that in perspective, last year, according to the National Retail Federation, holiday retail sales grew by 3.9%, and the pre-pandemic 10-year average was 3.6% growth. And while the current forecast for 2024 holiday sales look pretty good, I don't think they're generally adjusted for inflation. On an inflation-adjusted basis, the holiday retail sales forecast from ICSC and the National Retail Federation range between negative 0.1% and positive 0.8%. But remember, on an inflation-adjusted basis, last year's 3.9% growth rate was just 0.7% real growth. Now, you never know how things will play out. Forecasting requires data and math, of course, but forecasting holiday sales is also an art. It's partially driven by sentiment and confidence. It's partially driven by the employment market. It's partially driven by the stock market. Credit card debt and total household debt payments as a percentage of disposable income are also factors, and the list goes on. Now, I'm going to step out on a limb here and say that I think that holiday sales this year will exceed the ICSC and National Retail Federation forecasts. To explain why, I'll start with the math, then I'll move to the squishier variables. First, the job market is good. I've said it before, there are more jobs in the US today than ever before in the country's history. As of October, about 159 million people were employed. That's about 7.5 million more jobs than October of 2019 before the pandemic, a 5% increase. And I expect a bounce in the November employment numbers that come out this Friday as we recover the temporary job losses of the Boeing strike and the hurricanes. Second, average hourly earnings were $35.46 as of October, a gain of 25.6% from October 2019. Third, although credit card debt has increased significantly to $1.2 trillion, up about 6.5% on an inflation-adjusted basis from 2019, when you consider how much wages have gone up, they're not out of alignment. Credit card debt as a percentage of income is about 4%, in alignment with where it was from 2012 to 2019. Fourth, when you look at household debt service payments as a share of disposable income, they're at 11.5%, still below the average of 11.8% from 2012 to 2019. And fifth, total savings, including both savings accounts and money market accounts, is up by about $4 trillion from the pre-pandemic level on an inflation-adjusted basis. That's a gain of about 20%. In aggregate, people do have money put away. So when you look at the math, consumers, on average, are in a pretty good place financially. But that leaves the question of whether they will spend. Both consumer confidence and consumer sentiment, two different surveys of how people feel about the economy and their personal financial outlook, have generally been rising since they bottomed in mid-2022. But they're still well below pre-pandemic levels. And that drives a significant variable. Do people feel like they can or should spend? Now, a big factor in the recent election was the economy. And regardless of the math and the metrics, if people feel like the economy isn't good, they'll behave like the economy isn't good. And that's where consumer sentiment and confidence levels come in. I think a lot of the people who perceive the economy less favorably are generally happy with the election results, which suggests we may see a short-term boost in confidence levels. If that happens, holiday retail sales could outperform expectations. From a real estate perspective, that would support retail properties and industrial space demand. It could also lift self-storage space demand over time, as a boost in retail consumption often leads to a need for more storage space. And a good holiday sales season could signal rising sentiment, a sign that often leads to accelerating household formation, supporting demand for rental housing. So in a way, holiday retail sales gives us a peek into what's going on in people's heads. And that helps us look forward, enabling investors to keep their eyes on the horizon.